Hi all Inderes TV viewers. Tokmanni held a Capital Markets Day last week and they updated their strategy for 2024 and 2025. And today we'll discuss about the company with our analyst Arttu Heikura. Hi Arttu.
Hi Sara.
So could you first just quickly describe Tokmanni as a company and its business model?
Yeah, so basically Tokmanni is a discount retailer or discounter, which basically means that Tokmanni sells products. First it buys the products and then sells the products to the customers. And what the discount means is that Tokmanni tries to sell the products as with the lowest prices possible. So that is the discount. Business model, basically I just said that, but Tokmanni's assortment focuses on, or it can be divided to two categories, groceries and non-groceries. And the groceries consist mostly of non-fresh foods, so hygiene products and other daily goods. Then the non-grocery stuff, important categories just like gardening or cleaning or something like that. Tokmanni has grown quite good with opening new stores, and it has also made some acquisitions during its past history and just recently with the Dollar Store acquisition.
Yeah, okay. Well, if we look at the market a little bit, what is the market situation in Tokmanni's sector and how is Tokmanni's market position there?
The market has been tough during 2023, but if we go back to the COVID times when the demand was boosted by because of people couldn't spend their money to services or traveling or something like that. So all the consumption directed to products, and the growth was there good in retail. And then when the COVID restrictions were lifted or people could go traveling on restaurants and something like that, then the demand kind of dropped, and the situation was then that all the retailers had very high inventory levels, and then they were kind of stuck with the high inventories. And then came the inflationary environment and low consumer confidence, and the market has been tough since then.
Okay.
Discount market as such is growing much faster than the whole retail because of people get more used to go read discounters, and people try to find good prices, and that is the main driver for the discount retail industry. Also, the companies have quite ambitious targets to, expand their store network. That has also brought new customers for the discounters. So if we look at retail as a whole, the annual growth is something like 2%, quite in line with the GDP growth, but discounter growth can be something like 4 to 5% annually. That is the market situation right now. And was there something?
Yeah. So what is Tokmanni's market position there?
Yes. Tokmanni is basically the largest discounter in Finland and fourth largest in Sweden. In Denmark, Dollar Store is quite small player. They have only few stores there, but in Finland very strong player. In Sweden, growing player, and also in Denmark, growing player. If we take a look at the competition, it is tough due to everyone trying to provide the lowest prices, but and also with companies trying to expand their store network. So basically, there is right now, let's say, five discounters that try to expand their store networks. So that makes the competition environment quite tough.
Yeah. Okay. Yeah. Well, sounds like the market situation has definitely been a roller coaster these last few years.
Yeah.
Okay. Well, then let's talk about the CMD.
Okay.
So that was last week, and Tokmanni updated their strategy for this year and next year.
Yep.
And they mentioned that growth will be driven by Sweden and Denmark instead of Finland. So could you tell us a little bit about this updated strategy and especially about this international movement?
Yeah, sure. The strategy remained kind of the same, but the internationalization come on top of the strategy. So if we take a look more into the internationalization, the dollar store was the main driver for that. Tokmanni in its past, or in its CMD in 2021, kind of hinted about the internationalization, but there it was a minor thing with that strategy. But now, when it has kind of made the acquisition, then it's the major thing in the CMD. Yes, the growth will be much stronger in Sweden and Denmark, but there is also some kind of growth potential in Finland. So basically, Tokmanni says that it has room for 220 Tokmanni stores in Finland, and now it has something like 210 stores. So there is still some room, but and then Tokmanni tries to grow its like-for-like growth in Finland. But when we look at its market position and other players trying to grow, it is not easy. But on the other hand, in Sweden, Tokmanni says that there is much more potential with much younger store network. Tokmanni says that there is much room for growth. So basically, there is some called white spots where dollar store is not yet visible. So and Denmark is young market for Tokmanni, and the company says that it has started well, and there is also room for growth. In total, Tokmanni targets 360 stores in total in Nordics, and that means that it has to open like 25 stores during this and 2025.
Yeah.
So it is kind of it will bring very fast growth, I think. But yeah.
Okay, that sounds exciting.
Yeah.
Well, talking about the future a little bit more, how was Tokmanni's outlook and guidance for this year?
Yeah, it was kind of expected. Our consensus estimates were quite in line with the guidance. So basically, Tokmanni aims for revenue of 1.66 billion euros and 1.76 billion euros. and that if we look at the midpoint of the guidance range, it basically implies somewhat 20% growth. Of course, there is Dollarstore acquisition, which basically impacts for the growth kind of, I don't know, 6 or 7 months. So much of the growth is inorganic. And with the EBIT guidance, Tokmanni expects to reach 110 to 130 EBIT range. And that, if we look at the midpoint, it is somewhat 7% EBIT margin. So in total, the guidance is good, we think, and what we expected.
Okay, that's good to hear. Well, lastly, how is our estimates and recommendation for Tokmanni at the moment?
Yeah, so we see that there is growth potential with the store openings. Also, we think that Dollarstore has potential to grow its like-for-like or same-store sales, but in Finland that is somewhat difficult at the moment. So, well, the main driver for growth is opening new stores, and we kind of model that Tokmanni will open until by the 2025 in total something like 27 to 30 new stores. I don't remember correctly, but something like that. From the profitability perspective, we foresee that Tokmanni reaches 8% EBIT margin in 2025. That was rough estimate. I don't remember correctly, but something like that. And then if we look at the recommendation, we can take a look at the valuation, which we see that it is not expensive, but we see that the earnings growth, which we estimate to be something like 19%, we see that it is priced in the stock price right now. So there is no major drivers for the share price to develop or generate alpha in the coming year. Of course, there is quite good dividend yield, that is something like 5%. But if we look at our required return for the Tokmanni, that basically offsets the positive impact for the earnings growth and dividend yield. So that means that our rating is reduced at the moment. We see that Tokmanni is good investment in long term, but with some risk elevated right now. We see that there is no major drivers for Tokmanni's share price to develop that positively to that we could maintain our accumulate recommendation. So, yeah.
Yeah, okay. Well, actually, I lied when I say that was the last question, because one still came to mind. So if you could still summarize for us Tokmanni's investment profile at the moment.
Sure.
So what are the main risks and main value drivers?
Okay, if I start from the value drivers, let's start with positive things. Of course, that is the internalization. That is where the growth comes from. Also, Dollarstore has quite good business model in terms of opening new stores. So basically, Dollarstore achieves first positive EBITDA from the after first month of opening the stores. That means that the payback time of new store is quite rapid. And if we look at the how much is the average investment or capex for opening store, that is, in our estimates, that is something like, I don't know, maybe on top somewhat 1 million or something like that. Then if we look at the positive EBITDA impact, then the return on the investment is quite good. So that is why we see that opening new stores with profitable stores is justified for the company, because that drives the return on investment quite goodly. Other drivers, of course, Tokmanni tries to increase their share of private labels that are that has better margins than the A brand products. So if Tokmanni succeed in increasing the share of private labels, then it has potential to improve also profitability. So that is also one driver. Of course, if Tokmanni succeed in growing its like-for-like in Finland, that is driving the growth and value. And of course, Tokmanni tries to maintain good cost efficiency in current environment when inflation is still although it has come down, but it is still present. And if we take a look at the recent news of increased cargo prices from Suez Canal, and now the ships has to go around Africa. Of course, that increases the cargo prices, and that will impact Tokmanni also. And one thing that is quite negative is that Tokmanni is currently waiting for some cargo from Asia, which are basically for the spring season. And if those cargoes could not make it until the spring, then Tokmanni might be in problems, because there is some important products coming to Finland. So that was kind of risk, but other risks, competition. It is currently quite high. Cost inflation that I just mentioned. Then if Tokmanni is not able to open the stores at the pace it's planning to, it also reduce the growth and at the same time it reduce our estimates if Tokmanni could not deliver. So that is risk for the share price to not go up or even decline. Another risk that is now visible is the quite high debt level because of the Dollarstore acquisition, so which was funded with debt all. So that is now elevated, but Tokmanni Tokmanni is quite good in its cash flow. So with year or two, the debt level should decrease with good profit and good cash flow. Yeah. That are the main risks at the moment.
Yeah, thanks for the summary. Let's really hope that the cargo makes it on time.
Yeah.
Well, thank you, Arttu, for these answers. And thank you, Inderes TV, for watching. Talking about dollar store, make sure to watch our fun little video when we did a little field trip there this month. I will link it in the description box. Also, if you want to read more about Tokmanni as an investment, make sure to go to Inderes.se and go to the Tokmanni company page. You will find more material there. I'll see you in next videos. Remember to read analysis and make good investing decisions.